and speaking with us, and hope to catch up with you post the budget announcements are made, whether it stacks up versus your expectation or not. But moving on and welcoming on board Purinju Vilayat, the MD and Portfolio Manager, Equity Intelligence India, joining us on the show. Purinju, hi. Good to be speaking with you. Hope you're feeling a bit better. I know you're under the weather right now. But talk to us about the market, because we're talking about how the pitch is set for a sunny outlook, but there could be dark clouds on the horizon as well. What's your sense? Are we in for a bit of a reversal? Because from the election day, the Nifty itself has run up, what, 2,500 points thereabouts?
Good morning, Team 80 now and the audience. I think this budget is not going to be very important. It will be like may go almost like a non-event, or there may not be anything significant whereby market can break down or market can go in a big bullish wave. So it's going to be an okay budget. There is nothing much to with a significant difference to come within taxation. Of course, something like the very high personal income tax in India, which was 42%, and now it is, I think, a couple of budgets ago it was reduced to 39%. That, I think, still very high, and it's not good for India. There are reports, I don't know how true it is, so many people are going out of India because of all this excessive taxation. And later, after paying so much tax, then there is a dozen of other taxes coming up, including GST. So I feel there will be more liberalization of the personal income tax. That is very much required. And I think the markets are looking for a direction. So that direction is there very much intact. And as far as markets are concerned, the kind of money flow happening through SIP and various, the whole country, the whole population, every state and every tier 2 and 3 cities, towns in the country, the investing habit has gone up significantly, looking at equity investing. Unfortunately, in the initial phase, a lot of them, youngsters, are going into the F&O, option trading kind of thing. But that also will evolve and become more healthier going forward. There is no doubt about it. So we are going to see a very healthy capital market for the next 5-10 years and more. There will be corrections. There's nothing to say about dark clouds, as you mentioned. There is, as I told you, there is a directional, movement for the economy along with the markets. So equity investing culture will grow much further. There are a lot of positives happening around capital markets and equity investing. And it is true. The most important thing is that there are pockets of fraud in the market. This is everybody's telling, not only me, anybody coming on your channel. In the last maybe 6 months, everyone, all sensible people are talking. There are pockets of fraud, manipulated stocks, managed stocks, and with the low liquidity, some stocks are kept very high. So small investors, first-time investors in the market should be extremely careful about this aspect. Don't go by tips in the market, or just because of stock price movement, momentum investing, growth, those kind of things. People, especially the youngsters, the beginners. Why I say beginners? There are half of the active players in the market today are beginners. They might have entered in the last 1, 2, 3 years. So they are like they haven't seen big cycles. So it can be a trap for many of them. So that caution is always advised by everybody coming on the channel and talking. And but at the same time, market is healthy, market is richly valued. Maybe some of those companies with fraud, they also may be good, but maybe the problem is they could be priced for next 5 years. So there will be disappointment. We call it time-wise correction. So that's the kind of market I am seeing today.
What is your understanding of the rural end of the market, which is that the government will definitely do something to kickstart the rural economy? What can be done there, and which are the stocks to buy?
Okay, I think a few weeks ago, Nikunj, if you remember, we discussed this theme. The rural and agri sector could be a sector to watch, and the inputs like fertilizer or irrigation companies. So there can be some special focus of the budget on this rural and agri theme, which is very much required. Nobody will rule out the rural stress we are going through, which is almost the highest in the, if you say, last many decades. So it has its own structural problems and reasons for that. You cannot simply blame the government, but ultimately government has to give very special focus on employment creation, as everybody else mentioned about it. So the rural sector is the main focus. So I feel that in national fertilizer, and we were casually mentioning about some of those big fertilizer companies, they have moved up by all, I think 40-50% the last few weeks. That doesn't mean anything. There are agrochemical companies. I think not everything is managed well. There are some of those companies are not really professionally managed. So investors should be very careful about it. I think there should be some focus because they have been doing so badly in the case of agrochemicals. It's a sector to watch, but there is no hurry to buy. They are doing very badly even today. For the last couple of years, they are doing very badly. So a turnaround can result in 50%, 100% increase in some of those companies engaged in this business. When it comes to employment generation, textile is again one sector where maximum employment can be generated, the manual labor, so gardening and many verticals of textiles. So again, government have been always, have been already providing incentives for the textile, but there can be more focus on textiles. And now India is in a sweet spot as far as textile industry globally concerned. Much of the Chinese market share is coming to India after Vietnam and Bangladesh. So that there is a tailwind in that regard, and government's push also can come, which can really make the industry grow at a much higher rate in the coming years. And some of those listed companies could benefit immensely.
Right. Purinju, green, renewable mobility, all of that is also a key focus area for energy transitions. Have you researched that area? We've never heard much from you around that. Do you have any kind of a play represented in your portfolio from there?
We used to have exposure to some small companies like Select Energy, but it's too small, and now it has grown up also significantly. Currently, we are not holding. There are companies one has to watch, but a lot of those future is discounted already in the price of green energy companies. It's not an easy space to identify value. One has to be watchful. There's nothing wrong in investing in some of those companies, but be watchful. Where if you want to invest today, you have to, of course, compromise on the valuation dynamics. But maybe some of them could be worth it. I don't have any particular name coming to my mind.
I'm just going to get closing comments from Purinju, and then we'll recap the SimSim, and we've got a whole host of market guests coming up after that. But Purinju, budget, no budget. What will be your next 12-month strategy?
Stay invested. As on today, we are fully invested. We are not sitting on cash, and but at the same time, we are cautious. As I told you, there is froth and there is excesses in the markets, many pockets. But again, we say stock picking, cherry picking of stocks. This is relevant for every day throughout the life. But some situations comes where markets are richly valued. There are some sectors are riding the rally, and some sectors are too fancied. Amateurs are buying into large number of investors coming and buying in with a herd mentality. So some of those stocks are definitely overpriced. They will at least the minimum they will go through time corrections. When I say time correction, they may not make any return for the next 2 years, and it can go down by 10-20%. It can move in a range. So we have more of those kind of stocks in the overvalued territory. So, but there are ignored stocks. And some of these ignored stocks, I want to again repeat this, I have been talking about last 7-8 years or maybe more. Some of those companies, good businesses, there is a future for the business and a growth potential, but the promoters are not very, accepted in the market. Perception about promoters could be bad. We call them chore promoters in general terms, in amateur terms. There are changes happening. If you see the last 3-4 years, many such promoters, they have stopped siphoning out funds. They stopped disregarding minority shareholders. They started respecting minority shareholders because they realized, not because they became good humans, because even those guys, they realize, making wealth, creating wealth through the market capitalization of whatever the promoter holding 50% or 75%, that makes better sense. After paying tax, showing profits without siphoning out funds, managing the company very well, appointing professionals, professional CFOs and CEOs. So that is the change happening in the country for last many years. Especially, I would say, after this COVID thing happened and the kind of ridiculous valuation happened for a lot of smaller cap companies, they have all learning this. There are some companies yet to turn around that way. They also have to join the bandwagon. More compliance requirements. Regulators are, they are very much active in favor of the minority shareholders to get the due what shareholders should get. That's the one reason regulator is also is concerned about the huge valuation gap between the NAV and the market price of the holding companies. I don't know how it can be tackled fully, but there is a thinking process in the right direction. So the promoters, even the so-called highly ethical promoters, also doing such things. They try to suppress the valuation against the minority shareholders. So that culture also will go away. So those kind of pockets, special things happening, promoters' attitude changing, new promoter, next generation promoter, the son of the earlier promoter taking over. He's better educated and more ethical, more honest. So those kind of changes are the best to identify very special stocks in a special situation and do value picking or a special cherry picking of stocks in this kind of a market. General market, one should not bet on a general market at this point of time with a big hope. I don't think it's fairly valued, if not overvalued, overall Indian markets.
Purinju, great to have you on the show as always. Thank you for taking the time out and speaking with us today.
If you like this video, then like, share and subscribe to ET Now.